It was about 2 years ago that everybody was talking about the big CPG companies entering the space, and they were going through Canada, and they'd figure out how to get in the United States. And it was really less than a year ago that one of the Canadian companies bought one of the larger, or didn't buy, they tied up one of the larger American companies. And now the M&A environment is totally flipped 180. We're not going to probably be talking about good stuff in M&A, it's more the nightmares. But I'm really happy to have with me today on the panel. Some of these are last minute. If you're looking in your book, that is not Kim Rivers. It's Emily Paxia of Poseidon here in San Francisco. Eric Kaufman of Dama Financial. He's based out of Los Angeles. Katie Young she's the managing partner at Ad Astra Law Firm here in San Francisco. And Brent Johnson from Hoban Law Firm in Denver. And I'm going to let everybody just briefly share their own background, and then we'll get started. And we'll start with you, Emily.
Okay. Thank you, Alan. Everybody, Alan Brockstein was somebody that when we first got into the space was kind of like a rock star. We used to listen to his podcast every week. Anyway, it's neat to be still here with him 7 years later almost. So anyway, my name is Emily Paxia, co-founder, managing partner of Poseidon. We have 2 investment funds dedicated to the cannabis industry. We launched our first fund in January of 2014 alongside the opening of the Colorado adult use market. And it's been an incredible experience from that point forward. We've invested in the US, Canada, Europe, Mexico, and Colombia. And we launched our second fund in September of 2018. That fund is very focused on just Series A or later stage private companies. And it was kind of where we noticed a gap in the funding space when everyone was, to Alan's point earlier, just kind of focusing on this RTO, IPO process in the MSO category. And so we always have found that we do really well when we place investments where the crowds aren't running. So that's our second fund.
Hi, Eric Kaufman, Chief Revenue Officer of Dama Financial. By way of background, Dama provides the critical financial infrastructure that the industry needs to be able to operate just like it were a non-cannabis related business. 2 co-founders come from banking and payments backgrounds, took 2 companies public in that space. But the important thing to note is that one of the fundamental value propositions of both of those companies was moving a cash-based economy to a banked and digital economy. And that's all we're doing here. And so what we set out to do was provide them a solution to the most pressing need, which was a bank account, which we've done. And now we've continued to bolt on a whole suite of products and services, including interest-bearing account, escrow account, bill pay by check, ACH, or wire, Armor card cash pickup and processing, merchant processing. We're powering the back end of Helix Exchange, which is a cannabis commodities trading platform, and continue to add on products and services. So excited to be here. Thank you.
Hi, everyone. So excited to be here. My name is Katie Young. I am the co-founder and now managing partner of Ad Astra Law Group in San Francisco. We are fighters, not lovers. We handle business, employment, real estate, and IP litigation for cannabis businesses. If you have to hire me, you're having a bad time. So I'm here to talk to you today about what I see from the civil litigator angle and can tell you some real horror stories about failed M&A transactions and what to look out for so that you don't have to hire me ever. I am also the president of the International Cannabis Bar Association. For the attorneys in the room, canbar.org. We are the only bar association that supports attorneys servicing the business needs of cannabis businesses. Again, Katie Young, Ad Astra Law Group. Thank you.
Good morning. I'm super excited to be here and all my esteemed panelists. Great to be amongst experts in the field. I'm Brent Johnson, CEO of Hoban Law Group. We are the leading global law firm 100% committed to cannabis. We have about 50 attorneys headquartered in Denver. We cover 28 states. We have a handful of attorneys in Latin America. We're in Israel and soon to be in Europe as well. We cover basically anything a business needs from a startup to M&A standpoint or financing. We do corporate securities, mergers, acquisitions, private equity, venture capital. We do fund formation, intellectual property, real estate, employment, litigation, tax, and I'm sure I'm forgetting a few, but anything you might need from start to finish, we got that covered. Personally, although I'm a lawyer, I have a finance background as well. I started my career in Silicon Valley 20 years ago doing startup work, venture capital financings, fund formation, mergers, acquisitions, securities. Came back to Denver in 2003, worked for a large law firm there. Was associate general counsel at Quiznos during their big growth days. We We exited Quiznos at $1.5 billion. It was a private equity exit to JP Morgan. Left there, ran a couple startups, had those exits, ran a $65 million private equity fund for about 3 years till we sold off that portfolio. Then I came into the cannabis space because I came in as an investor because there's obviously tons of opportunity. And then I ran into Bob Hoban, and he sucked me into Hoban Law Group. But it's great. We've grown the firm, and we've more than doubled over 2 years. And it's great to be part of literally one of the leading global law firms that's 100% committed to cannabis. It's great to be here. Thank you.
And hemp too, right? And hemp too.
Yeah, and hemp as well. We're about 50% cannabis, 50% marijuana, 50% hemp.
Now, I want to start with you, Emily, because I know you have the right perspective here about the before and the after, but how have things been changing from your perspective when it comes to M&A?
So we've seen this whole industry has been going through a few cycles, and it really depends on a couple of things. It's been a catalyst-driven industry for sure, and the way that capital flows on the back end of a catalyst is it's really interesting to observe, and it's important to consider. The first wave of M&A that we were seeing really take place last year, or was it, yeah, about last year, we were seeing MSOs purchasing product companies was a big one, I would say. At that time, capital was flowing very well into that space because people perceived it to be a liquid space, and that there is a premium for liquidity a lot of the time in this, especially when you're talking about people who are thinking about how do I maximize a return in a short period of time. So we saw some of the acquisitions going on with some of those product companies that I would consider to be at pretty frothy valuations, pretty high multiples. Traditionally speaking, branded products don't command a very high multiple, but in these instances, it was kind of a land grab, and people were doing it, and it was driving stock prices up. It was an opportunity to really create more attention around the companies, and so that was really driving it. And then what we saw was what we call it kind of the Darwin phase or the reckoning, where people are starting to actually pay attention to business fundamentals, if you can imagine that. So thinking about things like revenue, growth of revenue, EBITDA, all of these factors that really indicate the health of a business, not just a press piece. At that point, we started to see more scrutiny about what people were paying for these companies and the way that these mergers were occurring or these acquisitions were occurring. And so now it's a different time where we're seeing the multiples come way, way down. We're seeing mergers starting to happen because it's basically too many people trying to do the same thing in the same market. And so a lot of people are trying to think about how do we go through a 1 + 1 = 3 scenario where we can come together, consolidate, and streamline our operations, and then drive revenue growth more in an exponential way rather than just incremental bumps. So I would say that we moved from a point of exuberance where it was driving a lot of attention, driving a lot of excitement, to now it's almost like a survival part of the M&A space, and it is a critical piece to it. One thing we're watching for is that, let's face it, in every maturation of an industry, not everybody's going to make it. Failures of startups are astronomical in every single sector that you look at, historically speaking. So some companies are not going to make it through this time, and I'm a little bit worried that we're kind of pushing things together without contemplating the true upside or accretive value of that, just to keep some of these companies alive. And I think we just have to go through the painful process of some of them can't make it, and I don't want to see the M&A process just kind of carrying dead weight through into the next cycle.
So Eric, you talk to people all over the country. What is your take on what's going on in M&A right now?
I echo the same sentiment. I think it's not just the exuberance, but the irrational exuberance has kind of dried up now, right? I mean, we called it dumb money, and while we're not directly involved in the M&A, I think we're a little bit ahead of the curve in seeing what's coming down the pike because we're banking the industry. So we see when funds go up or down or who's being paid or isn't being paid. So we get to see some of these trends before they necessarily rear their head to the masses. So I also think not just on the investment side, but you saw a lot of businesses get out over their skis. We were talking about it before. I'm a dispensary. I'm doing great. I'm making money hand over fist. I'm really tired of dealing with a distributor or something else. You know what? I'm going to get into distribution. So you get a distribution license, you get into distribution without realizing that it's a fundamentally different business, and you don't hire or bring on anybody that's got experience in distribution, and then that distribution company actually sinks the golden goose, which was the dispensary. So people kind of trying to get into every vertical, not fully appreciating that they are very different businesses.
Katie, I'm going to come right back to you, but first, Brent, can you talk about how things have changed from your perspective, the deals that you've seen at Hoban in terms of the amount of cash going into deals or anything like that that would have changed over the last year or two?
Sure, just a couple general trends that we've seen. If you look at the number of deals that happened 2018 over 2019, I think there was roughly about 250 deals, M&A deals that were closed in 2018. That's up to about 300 in 2019. Interestingly enough, cultivation and retail accounted for about 50% of those deals, which actually kind of makes sense because those are the areas of the market that are getting most affected by lack of capital and regulatory uncertainty. And so those are kind of the bargain companies right now. And another key point is that probably about 2/3 of the deals that are getting done by public companies that are acquiring companies as opposed to private deals. But we focus primarily on private deals, and we're seeing definitely the deals are getting challenging. Valuations are getting challenging. We're seeing a lot of companies that just they weren't set up correctly. They didn't have adequate capital, and so they're effectively they're distressed, and so they're not in the best bargaining position. Deal size, we certainly seen an increase in deal size. Probably our average deal size is probably 2 years ago it was in the the $5 to $15 million range. Now we're seeing them in anywhere from probably the $10 to $35 million range. So definitely seeing an increase in deal size, but everything seems to be on pause. Q4 definitely slowed. I think everyone is just trying to figure out what's going on. And then I do think that 2020, at some point in time, we'll see increased M&A activity. Last point that I'll make is with the legality of hemp now, we're definitely seeing more activity on the hemp side in terms of folks buying up cultivation centers to grow hemp, farmland, et cetera.
And Katie, you already warned us that you have nothing but bad news to share, but can you tell us kind of how much your business is picking up from failed M&A, I guess?
It's really sick business development, you guys. It's really bad. So, whereas Eric's on the front end and seeing, the trouble brewing early on, I am on the way back end dealing with, let's say, even a very well-formulated M&A transaction where, some months later, a year later, it needs to be unwound because, same reasons we've heard here, right? That they didn't look into it well enough. I see a lot of fights amongst just personality disputes amongst the owners. These are the sort of like soft things that can't be measured by, for instance, the lawyer running the numbers, right? That's totally different. So my business is unfortunately quite busy, and I was just telling these guys in the green room, I'm having trouble keeping up with the demand, which is really sad. And for a lot of these companies, they do kind of just need to go away, but instead of doing so, they're, the distressed asset, trying to find someone to come and, absorb them and pick them up and make it work. And, it's sometimes just bad business tactics at the front, lack of understanding of how much the tax burden from 280E is going to affect you, all across the board. I've seen all the different reasons, and people are losing their dreams. They're losing their hard work. If they hire the wrong lawyer and they don't negotiate well enough, or they don't understand the transaction, they end up really surprised later, and that's not a reason to undo a contract. But that doesn't mean people don't try.
So Emily, if we had been sitting here a year ago, we probably would have been talking about all the out-of-state operators, publicly traded especially, that were looking to buy California companies. And I'm sure you're here in the market, you know what's going on there, but what's your outlook for the exit strategy for, I'm sure, some of the people in the room here in terms of that exit strategy?
In terms of exiting through an acquisition by MSO, I think that that's still an opportunity that comes down the line. I think California has got a ways to go to get sorted. It's really hard to be an operator here, and I think egregiously so. I think many of the people in this market have been in it longer than anybody in the industry has been in it because of the nature of how long we've had regulations around cannabis in California. Now, these businesses looked very different once upon a time, but it's been so incredibly difficult, and the taxes are so incredibly challenging. And then you had all these resources pushing people into the illicit market, which is basically the biggest competitor for a regulated business, and it's just unfortunate. However, I do think there are good operators here, and I think the operators here actually have become the smartest and the leanest, and they know how to compete in one of the most competitive and longest running cannabis markets in the world. And so therefore, I think that once California gets sorted out, there are going to be incredibly attractive business opportunities here. And I think an MSO should constantly be keeping an eye on this market, because who would not want to have a toehold in the cradle of the Emerald Triangle, or the cradle of the bread basket and the wine basket and all of the wonderful things we have here in California, including the heart of cannabis. And so I think that I do think that's coming. I think it's going to take a little bit more time. The MSOs are definitely focusing on EBITDA positive businesses, and rightfully so, because they've got enough on their plate in these limited license markets where many of them are focused. But I do think that when they can look to these California businesses, they're going to see some of the most attractive businesses in the entire world. That, I would also say that some of the MSOs are finding talent from some of these California businesses because of the challenges they face in operating. If you can take that into basically an oligopoly market.
Limited license, it's easier to
Limited
say.
license, yeah. I try to mix it up. But then you can make it rain, because you knew what it was like to compete against 750 illegal stores in the Los Angeles market and still make money doing it. One of my favorite tweets this year was somebody was like, how did we take something that inherently made money and we managed to all start losing money doing it? Selling cannabis, people. So I feel like there's something to that. But so I'm still very optimistic. I mean, when we formed our fund, we did not form it in Colorado, which was the popular concept at the time, because Colorado was where the legal adult market was. We formed it in California because, to me, California still is the future of this. It's the history and the future of this industry.
So that is optimistic. What you're saying is keep your nose to the grindstone, the cycle will turn, and you'll be able to do your deal in the future. And if not, just go work for one of these guys and move out to, I don't know, Virginia or wherever it is.
Focus. Yeah, I'd have to be an optimist to be in this industry for this long.
Okay, so...
Do you mind if I just add? to
Yeah,
that
go
quickly?
ahead.
Because I think you touched on a good point. Unfortunately, we're having a very painful right-sizing of the market. A necessary evil, painful nonetheless, but anybody that's still in this space is incredibly bright. You can't figure out how to be here and still be here and not be incredibly savvy and smart about your business, because it is incredibly difficult. So I think that's why those MSOs are picking off people and bringing them on board. And I will just say, from a positive outlook, we're seeing an improvement in applicants for accounts, meaning we have a very thorough due diligence process when we onboard somebody. The businesses are better structured. The paperwork's more in order. The process is going faster and faster. So I think there's been, and you see it month on month, the improvement. So I think businesses are getting better at the outset than they were. You know, you're catching them, and they probably started several years ago. But now we are seeing an improvement, which is a positive change. So
Thanks. Is that in California, or is that across the country, or your
I
comment?
like to think as each state as its own country, right? Right.
Right,
So,
but
because unfortunately, in my experience, we haven't seen states learn best practices from other states necessarily. They kind of go do it on their own, unfortunately. So if you go into Michigan, there's a big learning curve, and some of that's natural, right? It's a new market. They're just opening their businesses. They don't necessarily, at least from our perspective, appreciate how difficult banking is going to be. Oh, it's legal in Michigan. I could get a bank account. Maybe, maybe not. So you kind of see a pretty steep learning curve. But definitively in California, we're seeing an improvement.
And then, so to avoid having to see Katie, Brent, what are you advising your clients to do? What are some of the smart things to do on the front end?
So, one comment on the previous topic. It used to be a couple of years ago, if you just had assets, you could attract capital and maybe even have an early exit if you had some licenses, you had some real estate. Well, those days are over. You have to actually have a business. Fundamentals matter. You have to have a strong management team. You have to know how to run your business efficiently, how to use capital efficiently. So you actually have to. It's like startup company 101, right? I mean, actually, have all the fundamentals that you need to actually run a business. From things to avoid. There's things that I've seen that are problematic. Is everyone wants to get a deal done by tomorrow, and they don't spend time on diligence. They don't understand the management team. They don't do all the kind of the background stuff. From a diligence standpoint, and I can go into a lot of details, but a lot of companies just don't have all their ducks in a row. I mean, your ownership structure. Do you have documentation for everybody that actually owns a piece of your business? We see it all the time where we go to do a deal. Well, it turns out that somebody put $100K in 2 years ago, but they never had a contract. They don't know the terms. We've had issues come up where they say, well, I want 5%. That was supposed to be 2 years ago. Well, now more money has come in, so 5% is now 2%, but they still want 5%, and there's no documentation. We have issues where they haven't done their securities filings. We have issues where they don't have contracts with their employees. We have issues where they don't have documented supplier contracts or distribution contracts. So across the board, we have issues where they haven't properly done renewals. So I guess long story short, get good counsel, get good advisors, get everything papered up, get all your ducks in a row, because not only will that keep you out of trouble, but that also is going to help you sell your company for a higher value.
Do you have anything to add to that, Katie, to avoid seeing you?
Yes, all those things that you listed are a really great way to end up hiring me. It's very sad. So I see a lot of what I call producers situations. Going back to the story about the producers, those folks who were promised 5% and it wasn't papered a couple years ago, and now all of a sudden they heard there's a big merger coming up, and they think they're going to get paid out, and they come out with their hand out, and there's been 120% of the interest pledged to people. Yes, that is going to cause lots of problems. It's probably going to tank your intended merger or acquisition. Disclosing what's going on with your company is the best idea, even if it tanks your intended transaction. Because if you don't say that, oh, by the way, this guy out here that is saying that I promised him 10% a few years ago, don't mind him. Put the risk on the acquirer, or your co-party to contract. Let them know what's going on, the good, the bad, the ugly, all of it. Let them make the decision and let them walk away. It's better than getting sued later, don't you think?
Yeah, absolutely.
Emily, you were involved with the Special Purpose Acquisition Corporation, MTech, that
Yes.
bought MJ Freeway and went public. We've seen a few other of these SPACs, and I'm just wondering if you think this is a positive for the industry, and will these be ways to consolidate? We've been talking a lot about cultivation and retail, but on the ancillary side, which is where they're going to be limited, if the ones that are in the U.S., is this a positive in your mind or negative?
So it's interesting how we went from this rush to the RTOs, and now I feel like it's raining SPACs. Having participated in really one of the very first SPACs in the industry, I thought it was a very, very good idea, and for the following reasons. It was allowing ancillary companies to gain access to the capital markets in a way that could create momentum behind an ancillary company and push it to the next level. At that point, there was only really the OTC markets available in the US, so this was like a real opportunity to get on the NASDAQ. And that creates a whole new access point in terms of analyst coverage, in terms of the institutional involvement, all of those things that can make for a really positive result. I know now it seems as though you can't swing a stick without hitting a SPAC in the US, and it's great in many ways because, again, it could create some velocity around capital flows within the United States towards these ancillary businesses, which we've been a big fan of ancillary investing since the beginning of our fund. In fact, that's how we started, because we weren't sure how investors would respond to plant-touching investing. So we started with a lot of tech and agriculture tech solutions to try to improve the efficiency of grow. So I do see a place for it. I have seen that it can struggle to find the right opportunity to invest. And a lot of the ancillary companies, like in our portfolio, we're grooming them. We're waiting for them to be able to actually just IPO, just do a direct IPO, either a direct listing or an IPO process on the NASDAQ or the New York Stock Exchange. We're patient capital, so we're willing to wait a few years for that to happen. But if a company is looking to go, like I've seen a couple of tech plays, like MTech is a perfect example of this, which then became Kern or Akerna, which was the seed of that, I would say, was MJ Freeway. And now they're looking to acquire other tech companies to kind of create this tech consolidated approach, suite of products for the industry. I could see how that works because when it comes to M&A, if you're a public company, you have different currencies to play with. And in other words, you have stock that you can really use to kind of drive the transaction. It doesn't have to just be cash, or it's not just private stock transaction. And so you have a little bit more in terms of the heft of the currency available, and you can also probably access capital more quickly if you need to do a raise to buy something out. So there are certain benefits to it. I wouldn't say it's the holy grail, but I think it was a very, in knowing the guys that put together that first SPAC, I got to understand where they were going with it, and I thought it was a very smart way to approach a capital constrained industry and to try to create more access points. One thing that makes me crazy about this industry is that because of the way the regulations are, like, we can only accept accredited investors into our funds, or even higher than that. And I think that democratization of access to investing into high growth industries is important. And I think that having it listed on these exchanges like the NASDAQ, where the reporting requirements are more strict, and I feel like it provides a little bit more safety around those investment opportunities for non-accredited investors to be able to participate in an industry like this.
And Eric, I think you work mainly with plant touching companies, but do you have a view on the ancillary space and M&A that might be going on there now or in the future?
Yeah, we'll work with anybody, whether it's a cultivator, distributor, manufacturer, retailer, home delivery, a jar manufacturer that sells a portion of their jars to the cannabis industry. And we're actually seeing a lot of those ancillary businesses that a portion of their business is cannabis related because they received a check from a cannabis company, put it in their B of A account, and they got the corporate account shut down. So if they're going to have a cannabis part of their business, they're opening up separate accounts. And so we're seeing a lot of that. And I think on the, specifically on the M&A side, what we're seeing is just, and this is just anecdotally, that people are moving away from the quote unquote, sexier side of the business or the consumer facing side of the business, and are looking more at the infrastructure side of the business, because that's really what's missing, distribution, financial, whatever it may be. It's the infrastructure to support the industry that really needs to be there. And then, as companies do these, call them roll-ups or consolidations, I do think people are getting a little more diligent in defining what is a fit for their business. It's very easy to get style drift and get excited and buy something because you think it's going to work. And then you realize, wow, that's not really our business. It sounded good or it looked good. And you can easily convince yourself that it's part of your core business. And I think people are taking a deep breath and stepping back and saying, okay, does this really make sense?
Hey, Brent, separate from cannabis, and the hemp side, is that on a down cycle like we're seeing in cannabis when it comes to M&A because of the federal uncertainty, or how is there anything specific to hemp right now that y'all are seeing?
So on the hemp side, we see huge opportunity on the hemp side, and I assume everybody in here knows the difference on. The interesting thing about hemp, it's now fully legal at the federal level, and it arguably has 50,000 industrial uses. So more than just hemp-derived CBD or CBD-related products. There are truly many other plastic bottles and batteries and car doors and houses, and so we're definitely all in on hemp, and we're making sure our clients understand that there's huge opportunity there. Marijuana is always going to be there, but it's got its medical uses. People use it to have a good time. But it's all just going to be that. Hemp's huge, and we're definitely seeing people wanting to grow more hemp. More states are adopting their plans under the new USDA regulations. And so our business probably 2 or 3 years ago was probably 70-75% marijuana and maybe 20-25% hemp. Now it's half and half, and I suspect in 2 years from now, it'll probably be 70-75% hemp and 20-25% marijuana.
So I'm going to ask a little bit different. Everybody's sitting on the sidelines right now waiting for the FDA to ultimately weigh in on CBD. Do you see pent-up demand for more consolidation when that happens?
Yeah. So with regard to the FDA, I mean, that's not going to get resolved anytime soon.
Right.
And so it's one of those things where folks are cautious, but a lot of it's just education. I mean, educating our clients that, yeah, there is this FDA issue, but I mean, there's compared to marijuana, there's a lot less risk in terms of hemp-derived products, and that's really just related to CBD. Think outside the box, and there's so many other things that hemp's going to be used to get turned into, and also all the other parts of it. I mean, all the genetics and all the technology around. How do you grow it efficiently? How do you process it efficiently? How do you efficiently make it into batteries and bottles and cars and plants and all that, or in houses. People think of hemp as CBD. Hemp is so much larger than that, and so definitely think outside the box, and also look at all the stuff that's going to be needed to be developed in terms of processing hemp and turning it into products and scaling.
So I want to give the audience an opportunity. Are there any questions in the audience?
If you have a question, raise your hand. Let's hear it again for the panel.
Not time, yeah. I have more questions if you don't, but I wanted to make sure if anybody had questions for the panel.
Who's got a question? Anyone? Anyone? Do I see? You guys are all incredibly well informed, apparently. You've
All right,
gotten
I'll
all
keep
the
going.
knowledge you need.
No
All right,
questions?
well-
All right, I'm going to go.
Oh, wait, there, I saw a small hand wave.
Oh,
All right, it was like an auction. You have to be very on it. It's very subtle, like an upper class auction. They just kind of.
Hopefully I don't get the $100,000 bill. So one of the things I did not hear, and one of the things that I still think that we're missing in the industry as a whole, when we talk about risk and risk aversion, and we talk about insurance and, yes, they have been providing business solutions and such, but they're finally really starting to look at the industry as a whole. So those of us that have been doing this for a while, I think that there's a big opportunity to bring that group along and not just in the investment. So maybe you can talk a little bit about avoiding exposure and product liability and some of the other things that are already affecting us.
sounds like a lawyer question. Do you want to rephrase it so that he can answer it? I'm sorry.
Yeah, it was a little hard to hear you. Sorry.
Risk exposure, right? We talk about the financial part of this, but we're not talking about the back end side of this, right? So as we, and this is probably to Katie a lot because you're probably dealing with some of those things. And then I think we see the whole vape gate and what we learned from unregulated, unlicensed areas.
Great. So one way I would answer that would be to make sure that you are surrounding yourself with the experts who know what they're talking about, and that means almost endless specialization, right? If you're concerned about your product liability, which you should be, everyone in the supply chain, make sure that you are going to someone and go retain a lawyer who is a product liability specialist. Do not go to the criminal defense attorney that kept you out of jail in the 90s, right? That guy is great. We're very happy with him, but it's like asking a podiatrist to do heart surgery, right? So the way that I see that people have the best luck controlling their risk is when they're seeking out and spending the money on the real professionals who know what's going on. And really, we were joking about this in the green room earlier, but like, it's so much cheaper to hire someone who's a specialist at the front end than it is to hire a litigator afterwards, right? This is really like, do not be penny wise and pound foolish. Really look into your risk. Be very honest with yourself about where it is, and listen to your advisors about who else you might need to go look towards. So that's one of the biggest mistakes that I see people doing, is that they rely on one lawyer for everything or one consultant for everything, and that doesn't work in any other industry. Why would that work here?
Hi, thank you, panelists. My name's Helene Servian. I'm a partner at Journey One. We do early stage cannabis investments. My question was around, there's two parts to the question. What industries outside of cannabis are you guys most intrigued or excited about that you think will start to tip into near future M&A? And the second part is, if those industries, i.e. Big alcohol, would it be through an investment into an MSO like Canopy and then an acquisition from Canopy, or direct M&A?
Emily, that sounds up your alley.
Wait, so is the first part of the question, is it what other industries am I interested in investing in? Or
No, that
I think
that are signaling near future M&A. So, for
Yeah.
example, like food and beverage,
Yeah.
right, with
Yeah, yeah.
CBD specifically.
Yeah, I mean, they're all over the space. I would say food and beverage or traditional consumer packaged goods companies are all over this industry already. They're already talking to companies, already looking at them. But what I'm not even sure that it's going to be M&A and not build your own product in many of those cases, because we have yet to see breakaway brands. We have some brands that are bigger in this industry. But from my background I used to consult for PepsiCo, and so I understand the way these groups think about it. And there's a lot of market research and understanding that goes into new product development and launching these products. So if there's a low moat around it, they're just going to do it themselves. And so right now, I feel like CBD would be falling right into that category. And so I'm probably one of the more skeptical people that acquisitions of high multiples of CBD brands are going to happen from traditional CPG companies or even alcohol brands. I think that from what I understand, Constellation kind of regrets the way that they invested into Canopy Growth Corporation, and I think that they've been pretty vocal about their disappointment in the performance and the lagging of the launching of beverages, and so I think that we've got some pain points to go, and I don't think we're gonna see those lofty multiples for a while again. I think that when some of the regulations change around banking and when things open up a bit more and things get of size, we could see some more interest around that. But I do think that so I know beauty brands, like I know L'Oreal's looking at the space. I know that alcohol is looking at the space. I know consumer packaged goods companies are looking at the space. I know big tobacco is looking at the space. All of them are investigating it, and all of them are trying to decide if they just do it themselves or if they buy companies.
And they're going to be slow until the FDA weighs in too on CBD, probably.
Yeah, it depends on where they're located too,
Yeah.
in terms of testing.
Did anybody else have anything to add to that?
I'll just say that I think it's kind of interesting because some people, or a lot of people, think that cannabis is like this really, really different thing and has to be treated differently. I mean, there's some legality and regulatory hurdles, but it's a plant, right? And it's going to evolve like most other industries, and so don't think of it that differently, right? In terms of from an investment standpoint and how it's going to evolve and where the opportunities are, because we're going to look back in 15 years and say, oh yeah, that's just like everything else that evolved at some point in time.
You know what I think is interesting, though? You pointed out about the other industrial uses of hemp, and that is where I'm seeing some large multinational companies, like fashion brands, are talking to those companies because they have something proprietary and special about how they can create an actual textile that's user-friendly, actually eco-friendly, and something that these large companies can work with, and then they can talk about this really interesting story about bringing hemp back, bringing seed, they're calling it seed-to-sown movement. So there's but that's where I'm talking about with the moat that gets really interesting, and that's when the M&A that's when you get the better buyout.
It's a great point, because really the only thing that concerns people right now about CBD is the FDA issues. There's so many other uses of hemp that there's literally no restrictions now to develop products using that plant for all those other products.
Mm-hmm.
Any other questions? All right, well, I want to thank the folks at ICBC and our panel as well. Thank you.
Let's hear it again for Alan Brockstein,